Thank you so much for joining me. My name is Jenna Witherby, and I'm one of the advisors at 401k Plan Professionals. And today's presentation is a part of our fiduciary training series. Every quarter, or about every quarter, I do some training on what it means to be a fiduciary, what your fiduciary responsibilities are, what ours are, and just different aspects of what it means to be a 401k plan fiduciary. Again, I'm one of the advisors at 401k Plan Professionals. And if you're not familiar with our team, we are an advisory group that focuses specifically on retirement plans. So 401ks, 403bs, and we have over 80 years of experience on our team just in the retirement plan industry. So we're very focused and very specialized on that area. And today I'll talk for about 20 minutes. I'll allow time for questions at the end. And the part 3 of 3 for this year will be held on September 12th. Typically, I had done quarterly fiduciary training and I'd cover everything. Well, this year I decided to kind of pick apart pieces of that fiduciary journey. And we're doing it in 3 parts this year just to do things a little bit differently. A recording from this today will be sent out to you automatically. Feel free to share that with anybody that you'd find value in it. And then this will be housed out on our website and on our YouTube channel, as well as all of our previous webinars as well. So those are great kind of on-demand areas for you to go for this type of education and broader financial wellness type education as well. You'll also get this checklist. This is just a nice kind of recap of everything in the fiduciary training, and there will be some 2024 compliance deadlines as well in there. So it's kind of a nice go-to one-stop shop. So here's the 7 different pieces of our fiduciary training. And again, this year I'm breaking it down a little bit more. So today we're just covering pieces 3 and 4. So talking about overseeing investments and overseeing service providers. So we'll start on the investment aspect of retirement plans. And when I say 401k, I mean that synonymously with 403b plans. So just if I say that, I mean, broader retirement plans in general. But who is a fiduciary with respect to the plan's investments? So the way that most 401k plans are set up is that the participants themselves can decide how to invest their plan accounts. You may hear the term participant directed accounts. And that's great, but as plan fiduciaries, we need to also take responsibility for choosing the investment options that are even available to them. It's very, very rare. In fact, I've never seen this where a plan sponsor says, you can invest in any fund you want, or even having a really large lineup like 50 plus funds. Typically, what we see is kind of in that 20 to 30 option kind of a range of different mutual funds. And that core lineup or that core list is what the fiduciaries are saying. This is what we're monitoring. This is what we're reviewing. You can choose from that list, but we're doing due diligence on these options. And fiduciary roles with options can vary. Most plan sponsors decide to appoint an investment committee that's given the decision-making authority with respect to the selection and oversight of the investments. So this really varies whether it's one person or 5 or 6 people. I'd say on average, the plan committees that we work with are 2 or 3 people, or 2 to 4 people, I would say. And types of roles, I would say typically we're working with human resources professionals, finance, accounting, could be president, CEO. You could even open up these committees to others that don't work in those areas. So it could be someone from the marketing department, but they just really have an interest in investments, or they're just, they themselves have been investing and have a lot of experience over the years. So they could provide maybe some different perspectives to the committee. But typically, it's not necessarily one individual person, but plan sponsors decide, okay, we're going to have this retirement plan committee or 401k committee. Then these committees can also decide to hire out part of the work to an investment advisor. And that would be where our team comes in, is we're hired for a lot of different services, but one of them is to act as a co-fiduciary. So sitting alongside these committee members with respect to making decisions on the selection and oversight of the investments. So our role could be one of two parts. So that's the part with the box around it. So we either sign on as a 321 investment advisor or a 338. There's also something called a 316 plan administrator, if you've heard that term. That's more in regards to reporting, notices, disclosures, compliance. So in that regard, sometimes you'll see TPA, a third party administrator, be able to sign off as a 316. But our role as advisors is 321 or 338. What does that mean to you? In both cases, really, we're doing the same actions where we're serving as the subject matter expert. We're arriving at committee meetings with analytics, data, information, and we're helping you make decisions on the investments. Now, in a 321 situation, we wouldn't get the final say. We could give you recommendations and tell you what we think you should do. But at the end of the day, the committee members would get to decide on, are we going to add this fund? Are we going to make an investment change or removal? The only difference between 321 and 338 is with the 338 environment, we do get the final say. So we do all the same work, like I said, same recommendation, but it's really just not open to a vote. It's here's what we recommend, and this is what change we're going to make, if that makes sense. We don't charge anything different. We really, for all practical matters, we operate in the same function. It's just technically, we can sign off on the actual investment change requests instead of a committee member, instead of an authorized signer from the plan committee, if that makes sense. So overseeing investments. The basic responsibilities of an investment fiduciary are selecting and monitoring the investment options which are available, and we talked about that. The plan fiduciary needs to engage in an informed and thorough evaluation of the plan's options. So that would be part of what we're actually doing at these committee meetings. And the cadence there, I'd say on average, we're meeting semi-annually for formal committee meetings, and then we send out quarterly due diligence. In some cases, plans want to have quarterly committee meetings. That's pretty rare. That the semi-annual meeting seems to be a pretty comfortable cadence with most plans. And if something needed to be addressed, in between, or sometimes with those quarterly electronic reports, we'll kind of add some commentary and can handle some things via email. So everything is pretty fluid that way. Every plan is different. A key takeaway here is that there's really no one size fits all. It depends on that particular plan. So things that we look at would be demographics. So what is the average age? Do you have a lot of employees that are nearing retirement? Do you have a lot of more entry level type employees? What are the education levels? Sophistication when it comes to investments and finances. We even look at the plan reviews, the data that we get from the provider. So the providers nowadays have a lot more data that we can sort through to see behaviors and usage and what are participants doing? Are they making a lot of frequent changes? Are they going on the website? Are they What are their average savings rates? Are they saving pre-tax or Roth or both? So those are just some examples of different data points that we could look at. There's many available options. There's no single correct choice for any plan. Some considerations here are types of investment vehicles available, asset classes, different management strategies, and different costs. Most of the plans that we work with have mutual funds, which are a pool of many different company stocks, very diversified, they're professionally managed, they have a set investment objective. Um, Rarely we see employer stock or really stock options at all available. Some plans have something called a self-directed brokerage option, where a participant can go off of the core lineup and purchase stocks or other mutual funds than what they see on their lineup. Typically, there's an added cost, and some providers even have a separate kind of a disclosure or something that participant needs to sign off on saying, yep, I know I'm going off of the core lineup. For our clients we work with, that's pretty rare. Like I said, very few offer the self-directed brokerage option. Collective investment trust, that first point, we're seeing that more and more. CITs are not available to all plans or on all platforms, but this is something we explore when it makes sense. CITs are not a mutual fund, but they're kind of a mirror of a mutual fund. They're a lower cost investment that mirrors a particular investment. So especially with mid and larger size plans, we're seeing some CIT usage. Separate accounts here and there, we'll see different annuity type products. Again, very rare. 99% of the time, we're dealing with mutual funds. A big key here is it's all about process. You are not, as a fiduciary, being judged by investment results that you achieve for your plans, but rather at that point in time with the information you were given, and what's going on at that time, whether you acted prudently in making those investment decisions. So the inputs are more important than the actual outcomes. So you're not responsible for always making sure you pick the best performing fund, and you can't predict the future. But did you document the process, the things that you considered, the things that you looked at, and have a well-documented, essentially, process throughout with your investment committee meetings and how you're arriving at these decisions. And something to aid in this is an investment policy statement. This is something that we like our clients to have on file. We don't necessarily have to review it all the time, but especially if there's maybe newer committee members, if it's a new plan to us, if something significant has changed with the plan or with the company, we would revisit this. But essentially, the investment policy statement is a document that's kept on file that outlines the process that we have in place with selecting and monitoring the funds. And you'd rather have an IPS that's more general, and the guidelines are loose enough where you can actually always be following them, instead of hard set rules like we're always going to have a fund that performs XYZ, or we always are going to have a fund that expense is ABC. It's better to not have an investment policy statement at all versus have one and not be following it. So they're broad. We work with ERISA attorneys to make sure that the language in there is appropriate, and we revisit as needed. And if you are in a committee meeting with myself or one of the advisors on my team, you'll get familiar with the different investment reports that we use. And some of it is from Morningstar data. We have some proprietary reports that we've created. And then we also use analytics from our registered investment advisor. This is, we call it the firm report, and it's a 12-point scoring system. Essentially, every quarter, your fund is given a qualitative and quantitative score based on different criteria. And we can track that, not only the previous quarter score, but looking back historically, what has it done over the last couple years? And then beneath this, there's a lot of analytics and data that kind of feed into this. We look at weighted average return, weighted average cost of your plan, and we document everything. So taking minutes at those meetings is important as well. Okay, so the next section is overseeing your service providers. So as a fiduciary, you are required to also hire a service provider. In addition to monitoring the investments, potentially outsourcing the investment monitoring to an advisor, you're required to select a service provider. And this word is kind of synonymous with record keeper, but this is the company that actually will be holding the accounts, sending the statements, basically conducting the transactions of dollars in and out of the plan. And there's other parties as well that may assist in this process. But you need to have a process for selecting a service provider that's informed and reasoned based on investigation and deliberative evaluation. So primarily, again, a record keeper, a company that's going to be holding the assets. Some plans have a TPA, a third-party administrator, that is on the side, and they're helping with compliance, could be notices, your tax reporting, your 5500 tax filing, more of the kind of compliance aspects of your plan. Advisors, investment managers, we talked about that in the previous section. If your plan is large enough, you may require a 401k plan audit. You have a trustee of the plan, a custodian, and you need to maybe pull in legal counsel now and again as well. But different things when evaluating a service provider, the firm itself, the nature of it, the quality of it, the experience and track record of the firm, what do they actually do, their business practices, different licenses and bonds. So those are some things that we consider in addition to fees, of course, as well, are a large part when you're selecting a service provider. ERISA requires that the fees paid to any service provider need to be reasonable. And so the way that we do that a lot of times is we compare your fees or compare that service provider's fees to similar size plans. We could even compare to similar size plans in your same industry. There's different databases and ways that we're able to benchmark these fees. Another is to put the plan out to bid and get multiple different fees from different providers, so you can kind of compare across the marketplace. Okay, how much will this firm charge for helping me with this aspect of my plan? How much will this firm charge? How much will this firm charge? So the word reasonable is really key here. So not only knowing what your fees are, but making sure that they're reasonable for the services that you're receiving. I have one poll question today. So do you understand the provider's fees associated with your plan? Just give it a few seconds here. Yes, no, or kind of. All right. So most people said kind of, and I'm not surprised by this. I mean, there's a lot of different fees and a lot of different mechanics with a 401k plan, and it keeps evolving too over the years. Fee disclosures came out several years ago, and that's great, but they're also one of those things that I don't know if many people read them. And it's definitely an initiative of ours. Every single committee meeting, we look at the fees, we benchmark the fees, we change our fees and make sure they're kept in line. It's really important for us to make sure that there's clarity there. And the more you see and hear it, the better. This is just some screenshots. This is one example of a database that we subscribe to called Fiduciary Benchmarks. This is a way for you to see, for my plan size, what are kind of the average fees? What are the middle 50% ranging here? Where am I? Okay, I know where I'm at. Is this reasonable for the services that I'm receiving? And we can even strip out from the total plan fees, we can look at what are just the advisor fees or what are just the provider fees. I had mentioned putting the plan out to bid to several different providers. We always assist our clients with that. We're not expecting you to go out and get quotes and put them into a fancy spreadsheet. We have tools that can help us with this process. And we keep in touch too with different record keepers, so we know like who would be a pretty good fit for you. They have different bells and whistles, or maybe are a better fit for your plan size or your demographic. So we can kind of help you determine who are we even going to ask. So we look at both qualitative and quantitative data when it comes to benchmarking. Okay, so we covered quite a bit there on investments and providers. I wanted to mention that there is an optional credential that we always offer up. You don't need to pay for it. We cover that, but it's called FEDC. It's a fiduciary training and credential. There's sessions and quizzes that you can go through, and this is something that I like everyone to at least do just once, and then you have it in your fiduciary file. It's just going to further your understanding of what it means to be a fiduciary, and help aid you in making decisions. This recording will be out on our website and our YouTube channel, like I mentioned, as well as all of our previous webinars that we've done. We have some upcoming webinars I wanted to mention. Our July Social Security webinar is typically our highest attended of the entire year. We do this every summer. Rhonda is great. She has been with the Social Security Administration for over 30 years. She's very good at what she does. And it's an hour long on Social Security, a little bit of Medicare as well. Part 3 of our fiduciary training will be in September. And then in November, we are having a post-presidential election market consideration webinar. So all of these you can register for, even if you don't think you can attend them live. I tell people still sign up and then you'll get the recording. Every January, I do a retirement considerations webinar and just talk about new limits, new rules for the year. I co-hosted actually with Emily Rowland from John Hancock on their market intelligence report. Just her comments on the economy and market overall. That recording is out there. I know that was a pretty popular one. And this was part 2 of 3 of the training. If you want to listen to part 1 of 3 that I did in February, that recording is out on our website and YouTube channel as well. March, we did Medicare. May, last week, we just did a Raising Financially Aware Kids webinar. That was really good as well. And we got some really great feedback on that one. So here's a QR you can scan for past webinar recordings that are out there. If you're a plan sponsor too, some of these you might find really would be relevant to your employee base. So feel free to share, forward, pass along with any of your staff, and really anybody that you think would find value in it. Okay, any questions on anything I covered today? Anything I talked about as far as selecting and monitoring the investments, selecting a service provider, benchmarking, monitoring service provider fees? If you have any questions afterward, you want to come to me, certainly do that. My email is here and my phone number. You will be sent the recording as well. And I think a survey will come up too. In that survey, you can put your email if you want to do that extra credential. I will send you the site and the code that you can use for that optional credential. All right. Thanks everybody for your time. Thanks for joining me this morning, and we'll be in touch. Bye-bye.